All right, I got a second video here because I forgot. I, it's so bad because I forgot I had another trade on. But anyway, this is the S&P 500. So this is how I trade the S&P. All right, you got internals on your left. Okay, basically here's your tick, advanced, decline, and volume, advancing and declining volume. Okay, got a lot of upside on the week. Okay, really good upside. It's been amazing. Not really understanding why it's been moving up that much. A lot of people have been very skeptical of this up move, just because most of the stocks that are trading on the S&P and in these indexes are not actually doing that well. So anyway, so what happened was it shot up. It came down overnight, shot up, and then right at the beginning of the U.S. session, I mean, it shot down really heavy. Okay. I mean, we're talking about, over 8 to 9 points in a matter of 5, 10, 15, 20 minutes. Right here, 5, 10, 15, 20. These are 5-minute bars, right? And then it shot back up again. And instead of hitting the highs of the pre-market, it failed, right? Came down, tried one more time, came down, tried one more time, and then failed, right? So as soon as it came down right here, right? See where it kind of came down and shot up one more time and then failed? Well, I was looking for that breakdown, broke down here, right? Came back up for a retest, and this is exactly where I sold, around the 2105 level. And as you can see here, 2105 is my entry, okay? I got 5 contracts left. I had about 8 contracts I shorted. Was able to get in or exit along the way down here, so I exit at the bottom of here because you don't know what's gonna happen, right? Whereas once it broke through here, then I'm looking at what are my levels to my left, right? That are my targets. This could have been my target here at the 2101. Okay, broke down here, is retesting it one more time. Hopefully it doesn't shoot back up, but if if this thing's gonna keep moving down, and again, like I said on oil, it is Friday, so people that were buying here and here probably are getting rid of their positions, and the sellers that are really in control, as you can see here, are gonna push this down even further, at least down to this target here, if not further. Okay, and I wouldn't be surprised if Monday morning anyone that held their positions overnight is gonna be shocked, and this thing's gonna be gapped down to the 2093 or even down at the 2088, because it's been happening in the market these days, and you don't want to be on that side. So that's why as day traders we get out of our positions at the end of the night. I thought I was done with oil, but I forgot. I mean, this is bad. This shouldn't be happening, but I'm done with oil. Okay, as you can see, no more on oil. Close. No more positions on oil. And right now I'm still in, like I said, it was 8 contracts total, five contracts right now on the S&P. So I'll go ahead and put my target. I don't have any targets. Okay, so what I'll do is put 3 more targets, probably at the 2098. Let's see, 2098.
Order pending.
2098. Let's say 75, right around here. 2075. Let's just be safe. 20. I don't want it to come down there and then bounce. That's why, because you got a little bit of up move here. But let's go ahead and at least get some of those trades out of the way so we can make a profit, right? Let's see. But as I said, you got the up move, you got the down move. You got the up move. Who's winning? You don't know, right? Well, definitely sellers were, but once sellers came back down to this level, buyers really took it up. But look how long it took for the buyers to shoot up, right? You got to think about that too. Buyers really shot it up pre-market. As soon as the market opened, U.S. market, bam, 20 minutes. Destroyed this whole up move, right? Okay, fine. Buyers are moving back in, so all these guys were buying here. Tried it again. Failed to go any higher. Failed again. All right. Dude, these guys, the buyers are done. They can't push it down any further. So what's going to happen? Well, if you understand the market, you see the opposite. So if the buyers aren't in control anymore, who's going to be in control? The sellers are. So as you guys are shorting the market, are pushing this thing down. As soon as you saw that opportunity, boom, short sell. And look how fast it's moving. You know, if I were to just highlight real quick, look at that. That time frame versus this time frame. I mean, just look at the yellow, okay? And just eyeball it real quick. That's how long it took to move back up after this very short move here, right? The 20 minutes that I talked about. As opposed to once it broke that level, right? Once it came down, failed here, look how fast it's coming back down. Okay? That means there's a lot of sellers and there's no buyers in the way. That's why I'm very confident. I held my contracts. I got out of 2 just in case. You never know what's going to happen once it got to this level here. Because I got my support and resistance level. That's not. I'm not going to discuss this on today's topic because there's a lot of things that the guys that I send these videos out do not know yet. But this is another way that I trade on the S&P. Let me see. Let me go ahead and scale out at least one position here at the 2101, 2100. Okay.
Order pending.
Got 3 contracts left over at the 29, and that'll leave me 1 contract left over. Okay. As a runner, because if it does break down this level, I could see it bouncing one more time. But look out, you tested it once, sellers came in. You tested it twice. Again, it's Friday. This thing's pushing back down. I mean, if there's some crazy institutions out there or hedge funds that are just like really adamant about holding this 2098 level, then so be it. They may buy again. But the opposite could be true. It could come down and look at it. All right, filled it again. Let me get out of this. What is this?
Order canceled.
Okay, 2099. Let's see this thing kind of come down a little bit further. But once it comes down here, right, and it breaks here, if it breaks here, I will look for another retest, and I will just short it again for the rest of the day. Okay, because really the next support level isn't really until you get down here. So I mean, if it breaks here, that's fine. It might come up, test the lows is the 2096.5 area, right? Because you see the previous day shot up to here to 26.5, came down, did not break lower, shot back up, broke above here, right? Broke above here, came down, retested it. I'll even zoom in, right? Came up, did not happen, didn't break. Came up, broke it, came back down, retested it, was another buy opportunity, and shot up from there. So that would be my next support level, or at least target as this thing moves down. Would be, once I get out of here, I would look to see if there's an opportunity to move down even further to the 96 or the 96.5 level, and that could be my next target. But if it does break even further from there, this thing could just fail down even further from there. But I would look for a break, see if it retests for another opportunity, and then get in short again from there. Okay. So that's basically how I trade. Now let me go back real quick to the internal. So the tick really helps out, okay, by giving me. I mean, you guys can look all this stuff up. You can find it on Google anywhere. But the tick basically tells me where is the skew in the market. Okay, is that the right word? So here's my 0 line, right? 0. Well, I can't hit 0 for some reason. See how all morning it just stayed above 0? That means there's strength in the market. So even though you see the sell-off here, okay, and watch my crosshairs. Okay, you see my crosshairs, how it's lined up over here on the market internals and on the charts, because it's coinciding with the actual the market, right? So you see this thing drop, but look at the tick. It's staying above 0. What does that tell you? It's actually telling you that there's strength in the market. So although you could have shorted it, I mean, I wouldn't have. What I would have done is watch this thing bottom. Watch this thing hit that support level, right? And then it came up, bounced, right? Came back down, bounced again, came back down again. I would have just bought right here. Because look at that. The whole time, if you look at the crosshairs, staying above 0. I mean, came down a little bit right here, which was that next buy opportunity, right? But after that, if you didn't get in here, you could have came up, see this thing break above, this level, came back down, and then you could have bought in right there too, right? But you look at it and see that it's above the zero line. But once it's above here, you know, this thing, the advanced decline indicator really helps you to see if the strength is going to be sustaining. And the only way you're going to see something really sustain overall is if it hits that 1500 and goes above it. You know, staying below it and then eventually breaking down, which it did. And I'll show you real quick. This is called, let me see if my mind can recollect right now off of my intoxicated state here. But, you know, you have higher highs and higher lows, which indicates a trend up. Lower lows and lower highs that indicate a trend down, right? But what happens is, you know, if you're looking from left to right, because you didn't see this in real time, you're moving up. All right, it's going to go higher and higher, right? Broke this high right here, bam. It's going to move up. It's going to break above here. But it didn't, right? Without looking at just the price here, the thing about the S&P that's so awesome is that you have market internals to give you even more information to make a better decision. Because check this out. Over here on the advanced decline, you got a high right here, right? Let's say at 1332, right? Broke that, right? Came down. And if you look on the right side, try to make another high here. So advanced decline over here was higher, which means there was a lot more volume and people buying in on the advancing stocks, okay? Stocks that are actually making money in the positive, in the green. More money is being pushed into those advancing stocks, right? So you got to think, if it comes down and retraces, which it did, right, then it's going to shoot back up. And it did, right? But look at the advanced decline. Look at the next high over here on the right. Here, I'm going to put the crosshairs on the right here, on the high right here, okay? It did break, right? It broke this, got even higher, but look at the advanced decline line. Over here was super high at 1400. The next high was what? 1354, right? Or even lower, 1346. But look at the price. The price spiked. Yet, the buyers weren't there. What does that tell you? There's weakness showing in the market. There's a divergence. Right? One thing's showing you, the price is showing you one thing, the market internals, which is basically looking under the hood, you know, you're looking at the true picture, is telling you a different story. That's why perfect opportunity to look for a short. Right? And you could have shorted it here, but that's not confirmation. You wait, look, should have bounced, didn't, failed, came down, and where this thing bounced here, that should have continued up and hit the highs and didn't, what did it do? This low right here that bounced off originally, it broke it. So as soon as it breaks it, just like on oil and gold, what do? You look for that thing to retest and then short it. Okay? And you know, that's basically the strategy I use for that. Now it's continually move down. The one thing is though, in this area right here, like I said, there was a lot of support earlier. Okay, so it could hold. It could hold. You know, I could see this thing coming back up to 2101.5. But what I would do is I would look at the market internals and go, okay, is it staying under zero? Okay, is it really making like higher highs here? And on the advanced decline, same thing. You know, is this thing shooting back up and looking like it's gonna, you know, move up and down, or in the opposite in this direction, moving down and then back up, right? Because if that's the case, then maybe this is a low. And then another thing too is it's not super weak. Like as long as the advanced decline is above zero as well. Okay, the tick is below zero, which shows that there may be movement going in the opposite direction. But the advanced decline is not below zero. It's not super weak. It's not super negative. So the support zone could hold, basically, is what I'm saying here. Because it's still in the 1,000 zone. So there's still buyers. You know what I mean? I mean, it could retrace. It could balance. It could, you know, in the bigger picture, if I zoom out here, you know, today might just be a balance. So you got a high here, got a low here, high, low, high, and this could be the low. And it just stays within this balance, this little, well, let me show you real quick. Make a little quick box. Oh, that's not it. it could just be balancing within this area. You know what I mean? This little box area. And that's fine. That happens all the time. Markets don't move like all in one direction every day, which is called a trend day. It happens very rarely, you know. In this case, let's see. This case here, you know, it had a low here, and then at the end of the day, it had a high, right? That's a trend day. This is really more of a trend day, although it did kind of move down at the beginning. You know, you got your low, and then really, it just moved up the entire day. It barely made any retracements on the way up. Another trend day. Here, low, high, low, high, low. So it basically stayed within this range. You know, didn't break below this low, didn't break above that high of the day. Got another trend day. Just pretty much came down all the way. Now you're saying to yourself, well, Joe, this last week looked like we already had like 1, 2, almost 3, almost 4 trend days. So what do you mean there's no trend days? This week was an anomaly. This stuff doesn't always happen, and you can back test. You can go back and look at the charts. I don't have to hide it. It's available publicly, free for anybody to see. Okay, so this is another 15+ minute video. It's in the 60 minutes. I've rambled on about a lot of different things. I have so much knowledge just doing this stuff every day. I just spout out stuff in the videos, but you know, again, it's easy to educate. I could talk about this all day long, you know. But it's a lot harder to show this in real time, to really do this in real time. And that's a skill that you have to develop over time, okay? And you got to look at the big picture. You got to make quick decisions, you know, while the market is moving. You know, you got to ask the right questions. The reason why I make a lot of these videos, not only to teach and to share the knowledge that I've gained, is but also like I learn a lot from this too. Because as I'm talking, you know, this is what we call self-talk. And you can apply that in a lot of different situations. But for me, when I do a self-talk, when I'm talking through the market and what's going on as I'm making these videos, I'm actually reinforcing whether or not the trade ideas that I've committed to are good. You know, if they're real, if I should hold on, or did I make a mistake? You know, and I'm justifying it, you know, in a very rational way. Okay, while I've been messing around with this ES, let me just show you real quick. I have another chart open here, but look at that. Look at that. That's oil, right? Look at that move down. Moved up, beginning of the day. All right, let me just zoom out even further. Zoom out. They kind of moved down, high, correction wave all day long. Finally broke that, and I made money on the way down, right? On the way, and then, you know, I got stopped out here, right? Let me show you something real quick. All right, what is that? Consolidation, break down low. First time test. Test it a little bit deeper into that area, but look at that. Another short opportunity, right? If you would have held right here, boom. From 47, let's just say 40, I like even numbers. Now back down to 47, 15, and even lower. Remember my target was at 47.06? I don't know if it's going to hit it. But got stopped out, so what can you do? You got gold over here looking like it wants to bounce up from here. But it's the end of the day of the week. I'm not really too worried or trying to extract every single penny out of the market. You can't always do that. But, you know, made as much as I could. You know. And I want to show you real quick on another chart here. Okay, so right here, you got a break of the LVA, this low value area, which is a green line. Okay, this is a separate proprietary system, or you know, indicator that's on the chart. You know, similar to this, but not as. This is a little bit more accurate. Broke, touched it for a retest, came back down, shot down real low, was able to make money all the way down to 47.15, came back up. Retested the LVA, that's moving down, right? Because as price moves down, the low value area is going to move down too. It's averaging down. Came back, retested it, did not break that developing value area, which is in the black. As long as it doesn't break it, and you see this strength into the market, sellers are still in control technically. And you see the Fibonacci dots. Basically, you see a movement either in down or upward direction. It will retrace up to about 60 to 70 some percent. You look for another short, which is basically what happened. So it came back up to the 47.40s, 47.3, a little bit higher than that. That was another short opportunity, right? Same thing you saw on this other chart. Like I said, right? There was a breakdown here. We tested that breakdown, right? And we were able to sell it. This was the first retest, right? Broke down, came up, retested it. That was the first easiest one. But sellers are still in control, like I said, end of the week, Friday kind of thing. This thing pushed down even further, right? This could be another opportunity here, but not worth it to me, right? All right, I'm gonna keep missing these charts. Okay, so right here would have been another sell opportunity. Targets below 47.20, 47.15 again, which was the low of prior day of the prior move earlier. Wasn't even that long ago. Am I really 21 minutes into this video? Okay, I'm making longer and longer videos. But anyway, I had a lot more to say on a different instrument, which was the ES or the S&P 500. So just showing you there's so many different ways to make money. But really the patterns and the techniques, market profile, which is basically what I use to get me into the trade, and looking at support and resistance zones to get targets to find out exactly where I want to get out, right? Because you're not going to know exactly the highs and the lows to get out, but you can be fairly certain where some good exits are, okay? And you can make better educated exits off of that. I mean, if you got those, you can make money, man. All right, and whoa, look at that. Looks like the ES and gold right here. I mean oil. Look at that. Came back, retested it after that breakdown. Looks like it's moving down. Maybe it might hit that 47.06. But let's pay attention to something else. All right. Looks like the S&P is kind of hovering back here. All right. Came up, rejected. Let's see this thing push down. If it doesn't, let's look at internals. Okay. Internals holding below zero on the tick, making new lows on the advanced decline, which are good signs. So, I can hold on a little bit longer, see what happens. We'll see if I can extract the rest of this out of here. I still got, what, 4 more contracts? Okay, 4 more contracts. Oh, man. Get out one more.
Order pending.
At least put a order there. But, yeah, everything else is looking good and looking like it's going to keep pushing down to hit my target, hopefully. If I am going to walk away from the market here, I'd put some stops up here, so I definitely can at least make a little bit of money or break even on the rest of my positions. Or some of you might be saying, just get out now, Joe. What's wrong with $800, $900 that you made on top of everything else you made already? So that's a good question. Maybe I should. Anyway, it's time to go to sleep. Hope you enjoyed the videos, guys. Feel free to share privately. And this is just the way I make money. There's other people make money different ways. There's different strategies, different trade techniques, different emotional requirements and needs. But I make money off of S&P 500, oil, and gold futures. My name is Joe. Good night. And continue to learn and hopefully you guys make some money in the market too. All right. Good night. See you guys in August.